Welcome to another exciting episode of Max Homes Real Estate. We are back.
We are back, yeah.
So yeah,
How are things, Max?
things are good.
Okay.
This week we have some major headlines to cover that impacts the real estate market.
Okay, cool. So
So
we'll get straight into that.
yes. So first one is about the job unemployment, job market.
Okay.
So basically our unemployment went up from 5.8 to 6.1.
Okay.
That is kind of cooling the labor
Labor
market,
market, right? Yeah.
which BOC is looking forward for them to cut the interest rate. So, we speculate that definitely there is a rate cut in June.
Right.
However, the gas price is going up, so that means it is going to push the inflation up.
Yeah.
So it's going to be interesting to watch what's going to happen.
Right. Yeah. So two contradicting
Exactly.
data, right?
Exactly.
Yeah. Okay.
So we have a BOC update on April 10th. We'll see what they predict. I mean, based on the data, what they
Communicate, right?
communicate.
Yeah. We are not anticipating any changes.
No.
They will hold the rate for sure.
Yeah,
For this, at least for this announcement.
exactly.
Okay.
Yeah, but for June, pretty much they were planning for rate cuts, but
Yep.
we will have to sit and wait.
Yeah. Let's find
How-
out what they communicate, right?
Yeah, and what the inflation print is going to be
Correct.
for the next few months.
Okay. Good to know.
Yeah.
Anything else?
Another update is from CMHC. They are speculating that home prices would hit new heights
Okay.
by 2026. So basically, what they are saying with the multiple rate cuts on cards, that means more buyers will be into the market, and that will drive the demand up, and which implies the price will go up.
Yeah. Okay.
Back in 2022.
So, yeah. Their prediction was totally wrong, right?
Yeah.
And they were backlash by different people and economists, where they were forecasting the market to go down, like to correct the prices in a very big way, but it really did the opposite.
Yeah.
So let's see how this speculation gonna be work out, what they did for this time.
Yeah.
Um,
Nobody has a crystal ball to
Yeah.
say how the market is going to behave.
Right,
So
right.
it's they predict based on some data,
that's true.
and sometimes we are into a big surprise. So we'll have to sit and see.
Yep. Let's see.
Another major update is about the home price. The data came out for the March,
For the month of March.
TRREB data. So basically, what what it shows is the home sales are down compared to year over year, but the prices went up.
Okay.
We in our next section we'll deep dive into what the
data, right?
numbers are based
Yeah.
on TRREB data.
Okay.
Another headline that we have is we have the federal budget
Okay.
coming up on April 16th. So Trudeau is expected, or he gave a teaser that there would be updates on mortgage measures. So the economics are speculating that they might move. Currently, for the insured mortgages, the amortization is 25 years.
Right.
They might push to 30 years.
Oh,
If they do that, that means the buyers will have more affordability.
correct.
Basically, their monthly payment will come down.
Yeah.
That means more buyers will be in the market. But guess what? That will drive the
price, right?
price of the homes high.
Yeah. So we don't know, how that. I mean, if it comes into picture, then how the things will play out, right?
Right.
Yeah. One way it is gonna increase the affordability, but the other way the demand is gonna be higher
Right.
in that case. So let's find out. We will closely watch out the budget, because we are anticipating more housing measures.
Yeah.
So we will look out any measures with regards to real estate, and we will gonna discuss that in our next video.
Yeah.
Yep.
Another update that we have is on the cap of temporary residence in Canada.
Okay.
So basically, we are at 2.5 million for temporary residents. Basically, the folks that are on work permit, international students.
Okay.
Because housing affordability and the inventory is a concern,
Right.
they want to reduce the cap of those temporary residents from 2.5 million to 2 million in the next 3 years.
Okay. So,
So-
currently in our population, like we have 2.5 million temporary residents.
Right.
Okay. Okay.
Mind you, they also add to the economy because
Right.
the international
Right.
students bring in more revenue,
Yeah.
and the temporary foreign workers, they bring in more talent.
Mm-hmm.
So, so
Yeah. It's I feel I don't know. Like maybe this might be a right move, right? Because until now everybody was talking about the supply.
Yeah.
We don't have inventory, but nobody was not really caring about the demand side. So this is the right move to do some kind of regulation with the demand in the demand side.
yeah,
And hopefully it would balance out the supply and demand, and it would do the magic, right?
exactly.
So let's find out how this is gonna impact our real estate market.
Yes.
Yep. So any other headlines for this week?
Yes, from the office of OSFI,
Mm-hmm.
which is the Office of Superintendent of Financial Institution. Basically, they regulate the banks.
Yeah.
They are the folks who introduced the stress test back in 2017.
Right.
So what they have mentioned is typically, the mortgages are like the loan to income ratio is like, it's 4.5 times you
Yeah.
qualify.
Right.
They want to reduce the highly leveraged mortgages.
Okay.
So
Which goes in excess of that 4.5 times of income, right?
exactly.
Okay.
So that's a risk for the banks. So they
Right.
want to reduce those kinds of loans within the portfolio, so that banks play safe.
Okay. But it's not gonna be directly impacting an individual
No.
mortgage application, right?
No.
Okay.
Solely for the new applications and across the portfolio, they want to regulate the number of highly leveraged loans.
They actually really want to protect the institutions. I mean,
Exactly.
the financial institutions.
Yeah. If they don't do that, whatever happened in US
Oh,
in
yeah.
2008 can repeat in Canada.
We don't want to
No.
go for
So
it. Yeah.
yeah.
Okay. That's good updates. I think we can jump into our next section, which is about the market data as such, right?
Yes. So the TRREB released their market data as of March.
Okay.
So if we deep dive into that, basically we can see that the total number of transaction, if you look at March, came down by 4.5%,
Okay.
and the average selling price actually went up by 1.3%. So currently the average selling price is at 1.121 million.
Mm-hmm.
And now with respect to the new listing, if you look at year over year, it went up by 15.1%.
Yep.
And the sales to new listing ratio, we are at 50% for the whole GTA,
Okay.
which means we are in a balanced market.
Balance market. Okay.
Again, mind you, this is across GTA.
Right.
Now, if you take individual areas,
Market, yeah.
depending upon the sales to new listing ratio, we might be in sellers,
right?
we
Yeah.
might be balanced, or we might be in buyers.
Right. Yeah. So if you really want to know the data, the monthly data for a specific location or a specific pocket, please reach out to us. We can help deep dive into the data and discuss it further.
Right.
Yep.
Yeah. So another interesting thing that we want to share is we have a breakdown based on the property types.
Oh, okay.
So average selling price, as we mentioned, is 1.121 million, which is 1.3% more than previous years in March 2023.
Okay.
And if you look at the detached homes, the average selling price is at 1.46 million. For semi, it is 1.12 million. For a townhouse, it's 940,000, and for condo, it's 700,000.
Okay.
Yeah.
Oh, that's a good breakdown. If you see, the condo price is 700K and the detached price is 1,400,000. So
Almost double, eh?
double, yeah.
Mind you, there's a lot of condos that are unsold. There's a lot
Right.
of inventory in condos,
Right.
but not so much of detached
homes, right?
Yeah.
Okay. If you move into the weekly data, I think that is what the the data that we really focusing on in these videos. So what we see for this week, for the last week is, if you see the active listings, it is hovering around 15K. So it's actually 15K to 46 listings currently in the market. If you compare to 24th of March, the 2 weeks before, it was 14,573. So there is a little jump in the active listing.
Correct.
That you exactly see in the new listings as well. So new listings were 3,389, and now it is sitting at 3,654 new listings have come into the market. If you see the 31st of March week, if you see the data, all the metrics are, it's a little low. There is a little dip in the market because that is exactly where we had a long weekend.
Exactly, yeah.
So whenever we have a long weekend, we usually see that. So see that dip in the market. So it's not unusual to see that dip. And if you see the number of sales happening, so that is where the highlight is, because the sales are hovering around 15K. So it's really consistent for the last last, I would say, 1.5 months. From the beginning of March, it is still it's hovering around 15,000 in that range. So the sales are consistent. I mean, the number of sales are consistent, but we are gradually building up the inventory.
Right.
So that means, there would be more opportunities for buyers, right?
Right.
So what do you see in the ground? Do you really see exactly the same thing?
Yes, pretty much aligned with what we see in the data here.
Okay.
So we have properties, sitting in the market and not moving.
Okay.
And the sellers are pretty much expecting, the sellers are not getting what they are expecting. And we are relisting the property.
Yeah.
And trying to bring in more traffic.
Some standoff between
Yes.
buyers and sellers, right?
Yes.
At the same time, some sales are happening though.
Yeah.
Which is good. I think we can take it as a healthy market, right?
Yes.
Yeah, it's not driven by the sellers or even driven by the buyers, I would
Right.
say.
Right.
Yeah. Okay. Good to know. So we'll continue to track the weekly data, and if we see any changes in the trend, we would for sure we're gonna discuss here
Yes.
in the next video.
Yeah.
Okay. So I think we can jump into the next section, which is nothing about the mortgage rates.
Yes. So next section is the mortgage rates.
Yeah.
We have good news. So basically, the rates for 5-year fixed rates have come down by 10 basis points.
Wow.
So basically, the bond yields came down. So it's pretty much exactly what we expected in the last video.
That's really right.
And if you deep dive into the numbers, the prime is at 7.2.
Same.
Yeah. And if we compare from March 23rd to April 5th, basically the 5-year fixed, the insured and uninsurable, the rates came from 4.99 to 4.89.
Okay.
And for uninsurable, basically the rates came down from 5.44 to 5.34.
Okay.
So basically, those color coding you see, the green means there is a reduction in the interest rate.
Okay.
And the yellow means the rates have been stable.
Okay.
And red means the rate went up. So if you look at this grid again, for 5-year variable, pretty much the same. It's prime minus 0.95 for insured and insurable. And for uninsurable, it's prime minus 0.45. Now for 1-year fixed, basically the rates went up by 10 basis points for insured. So it's from 6.59, it went to 6.69.
Okay.
However, for insurable and uninsurable, the rates were held steady at 6.93. Now again, for 3-year fixed, good news, the rates came down. For insured, it came from 5.09 to 4.94. And insurable, it came down from 5.49 to 5.19. And for uninsurable, came down from 5.49 to 5.34.
Okay.
So yeah, I mean, again, these are the overall rate change. But it depends upon case by case is what you qualify. They will run your credit score, they will run your GDS, TDS ratios, and run your risk.
Yep.
And you will be, your rate will depend on all those factors. So it will be tailored for you.
Okay. Yeah. But this will give them a general idea on how the rates are moving, right?
Yeah.
Okay.
And if anybody is interested in any of these rates, feel free to give us a shout. We'll connect you with our mortgage agents and help you get a deal. Okay, so that was a good wrap. We covered what we wanted to cover.
Right.
Pretty much covered the major headlines and all the data that we want to bring to you. We'll continue to monitor the data, bring you the latest trends. So until we see you again next time, this is Max Thomas.
This is Rinson Matthews.
Stay safe.
Stay safe.